We are live from Bloomberg's World Headquarters in New York. I'm Shonali Bassick, stepping in for Matt Miller today.
And from our studios in Washington, D.C., I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance. Coming up, crypto evangelists have been enjoying a I told you so moment during the turmoil in banking. But will it last? We'll discuss with Mike Belshe, the CEO of BitGo.
And recent bank failures have many pointing fingers at the Donald Trump era of deregulation. We're going to talk policy with Mick Mulvaney, Trump's former chief of staff, who is now a strategic advisor to crypto compliance firm Astra Protocol.
And crypto in the high court. We'll examine the Coinbase case that may foreshadow more legal showdowns to come. So all of that is ahead, but first let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP-GO. That is your function. And what you will see is, despite looking a little bit fuzzy earlier, Bitcoin actually is continuing its rally, up another 1.25% or so today, higher around the $28,400 level. This is the highest level we have seen for Bitcoin going back to June. Meanwhile, the rally is even stronger in other areas of the digital currency universe. Ether is up about 3.2% at 1,800 and change. Cardano is up the better part of 5%. And then I have to point out XRP, up a whopping 18% on the day. A lot of the XRP army, the supporters of this token, are pointing to optimism around potentially a conclusion coming to the case of the SEC against Ripple and whether XRP is a security. So certainly seeing a big move for that token today. But what we have been seeing over recent days are big moves in Bitcoin, moving pretty consistently higher. Actually, over the last 2 days, this current cryptocurrency is up a whopping 40% or so, just shy of it. And Shonali, of course, this is as we are seeing turmoil ongoing in the traditional banking system. It raises a question as to why this is happening. We're going to try and get an answer to that now.
We certainly are. I'm very curious about the new narratives behind Bitcoin. And for a look at the recent moves at Bitcoin, Bloomberg's Vildana Hajric joins us now. Vildana, what's behind the rally? Because we have another Fed meeting tomorrow. We have a lot of pressure on the banking system. Is Bitcoin just the alternative, or is there something else at play?
Yeah, so cryptocurrency investors right now are really reveling in this moment. As Kaylee said, it's almost like an I told you so moment where you have cryptocurrency investors and Bitcoin enthusiasts and fans really looking at the rally that's been happening and pointing to the troubles that are happening in the banking sector and saying crypto is different. It's removed from the mainstream financial system. You can't have the government coming in and interfering with anything that's happening in the world of crypto. When it comes to your Bitcoin, it's your Bitcoin. And a lot of people are just pointing to, you called it the maybe new narratives, but really it's like the old narrative. It's the original, the sort of siren song, as one investor put it to me, of why people were interested in cryptocurrencies to begin with, and hence this huge rally.
But I guess the question is, how long can it last, or how high can it go? We're still waiting to cross that $30,000 level. Why is it important, and what happens if we reach it?
So cryptocurrencies really, broadly speaking, have been rallying this year. Bitcoin is up something like 70% since the start of the year. So it started the year at around 16,000. Right now, it's hovering slightly above $28,000. And so the next level that everybody is watching for is, of course, $30,000, because people within crypto love round numbers. It really is a psychological signal. It just would signal that Bitcoin has come a really long way thus far this year in the rally that we've been seeing. But remember, it's still down quite significantly from that high that we reached in November of 2021, where it reached almost $69,000. But still, we have this momentum. Momentum builds on momentum, and you have people noticing the rally and then jumping in, and hence this excitement that's been building.
Bloomberg's Vildana Hajric, thank you so much for your time. Joining us now is Mike Belshe. He's the co-founder and CEO of the crypto custody firm BitGo. Mike, thank you so much for joining us. We're talking about what it means to store your assets, to move your assets, and pay for them. Something you are very, very involved in the crypto world in particular. I'm wondering, when you look at what's happening in the banking system, how this impacts crypto, the sentiment around it, and draws new questions about how this can be a store of value and a method of payment, a way to be a new financial system.
Well, thanks for having me. Look, I think there's two things that are going on concurrently right now, which are impacting the Bitcoin price. I mean, first off, we've had a displacement of crypto companies out of their existing banking firms. Obviously, regulators are taking a different look at banking and how banks should interact with crypto firms. That's caused a displacement. The second thing, though, is really looking for when Bitcoin becomes the uncorrelated asset. This has been a theory around Bitcoin for some time, and seeing this kind of strain on the banking system, we start to see it decouple from other assets.
You mentioned the strains yourself. I'm glad you took us there, because the reality is regulators have been very upset about how much money has been lost, certainly among the exchange system, but also among the lenders in the crypto ecosystem as well. What comes next if there's so much regulatory pushback against the industry?
Well, look, actually, the regulators starting to participate is a positive thing more than not. Remember that, financial systems tend to go through ups and downs, and it's a balance of getting the private industry right and getting the regulation quite right. Obviously, FTX last November was a huge wake-up call for regulators that, it's time to start participating. Now, I think the regulators actually have a lot of fault in terms of how we got to where we're at. Frankly, if instead of having one bank that was shouldering the majority of the digital asset space completely on its shoulders, and it was a small bank out of San Diego, California, if instead we had hundreds of banks, each holding 1% of the industry on their shoulders, we would have had a much more robust system, and regulators could have helped that happen.
Yeah, maybe you could have avoided some of this concentration risk we've all been talking about for the last 2 weeks. In the absence, though, of that regulatory framework in which you would allow greater access to the traditional banking system on the part of crypto firms, it raises a question of if any entity can fill the gap here in the U.S., or instead these companies are just going to have to go offshore.
Well, that could happen. I think that would be an unfortunate byproduct. Look, I think regulators don't have the permission or right to kill an asset class. Frankly, it should be looked as shameful if that's what's going on. And it does look like there's Operation Choke Point 2.0 that's happening, where this regulator, backlash at the crypto industry. Their job is not to decide what Americans want or not want. Their job is to help regulate and make fair markets. So I hope they go back to concentrating on how do we build fair, safe markets that people can count on, and make sure that crypto survives. There's a tremendous amount of opportunity with what we can change with technology.
Of course, one of the primary regulators in question continues to be the Securities and Exchange Commission, and SEC Chairman Gary Gensler, more particularly, some of the proposals he's put forward, including with custody. For BitGo, how do you view that? Would a proposal like Gensler's end up helping or hurting you?
Well, aside from the selfish impact on BitGo, look, we were a custodian, and we've been helping build market structure for 5 years. I think we were talking about it, long before it really caught a lot of attention at the federal level today. We definitely need to start building separations between the different functions of markets. When it comes to trading markets, we've always looked for robustness and separation of duties in a way that keeps investors safe. And frankly, if we had separation of custody from trading, it helps a tremendous amount. So for the most part, I like what's coming in the custody rule changes. There's a few things in there which I would still tweak and change, but I'm glad that the SEC is weighing in on how should those underneath the Investment Advisors Act be custodying assets on behalf of their clients.
Mike, give or take a year ago, BitGo was seeking an acquisition by Galaxy over here. It was one of the largest in the industry. Things have changed a lot. That deal fell apart. There was a lawsuit that ensued after. How do you think about how you grow from here without an acquisition, and what comes next in kind of your pursuit of, you're pursuing funds against Galaxy?
Well, look, BitGo's been in a strong position. I mean, I think it's, actually part of, what just changed in 2021, 2022, which at some level led to Galaxy not being able to afford BitGo anymore. At this point, our business continues to grow. Now, we've been through the ups and down cycles of digital assets, and we're used to that. We know how to navigate that. It's unusual circumstances. Most businesses don't have quite the extreme of ups and downs. But we are building a whole new asset class here. We are building digital assets from scratch, defining a new market structure around it. And I don't mean just BitGo, I mean the entire industry. That takes time to put together. So, we feel fortunate. Like, we're excited to be able to continue to launch new products, and then becoming fast and furious. We're known for our highly regulated and compliant approach that we take. We've always taken a really straight and narrow path. So we're in good shape. We're happy.
I know you've worked with a lot of interesting people here when you think about the payment rails that can support Bitcoin. Do you see more countries or more large institutions with the kind of complicated environment we're in really taking up the ability to move towards the crypto ecosystem for payments?
On the payment side, I don't know. I think that we're a little bit farther away on payments. There will be some wins around a certain amount of remittances and things like that. Look, stablecoins offer a tremendous amount of value, and that's being used to promote dollars actually around the globe. I think regulators should be quite happy about that. Otherwise, though, for payments, you need a stable value, right? And digital assets, sometimes it's confused. I mean, certainly high vol, but that's because it's small and just up and coming. So crypto, Bitcoin need to get much, much larger before they're going to be an effective payment system. The technology's fine. It's the size that needs to grow in order to get the volatility down.
All right, so scaling issue. BitGo CEO Mike Belshe, thank you so much for joining us. Really appreciate your time. Now, coming up, we're going to be joined by Mick Mulvaney, Trump's former White House chief of staff, who is now a strategic advisor to crypto compliance firm Astra Protocol. Plus, the Supreme Court enters the era of crypto, Shonali. We'll have more on what's ahead on today's Coinbase case, what it could mean as well for the future of the industry.
And to
access all of the latest data and news on crypto.
Daily.
Check out CRYP Go. We're going to get ourselves together in the break. This is Bloomberg.
I think this has been a huge wake-up call, not just for crypto businesses, but for all businesses across the United States that our financial system, it's fragile and it's leveraged. Policymakers, regulators, they should be doing everything they can to restore confidence in our financial system. They should be looking for new and innovative technologies like blockchain to modernize our financial system to create more transparency and efficiencies in the markets.
That was Perry-Ann Boring, founder and CEO of the trade group Chamber of Digital Commerce, speaking with us last week. Joining us now to further this conversation on regulation is Mick Mulvaney. He is President Trump's former White House chief of staff, who's now a strategic advisor to crypto compliance firm Astra Protocol. And the resume is a lot longer than that as well. Thank you so much, Mr. Mulvaney, for being here with us.
Thank you for not doing the whole resume, Kaylee. I appreciate that.
Well, we appreciate your time. We have had many conversations on this show over the course of the last several weeks, and even before that what we had been seeing here in the U.S. was a slow, systematic expelling of crypto from the U.S. banking system. Now, in light of the failure of Signature, of Silicon Valley Bank, I wonder what your view is on that kind of accusation.
I'm sort of torn, right? I don't want to believe that it's happening because I don't want to think that the government would actually do that. But then I weigh that against the fact that I saw it happening in other industries when I was in the House Financial Services Committee. We actually had hearings on what we call Operation Choke Point, or what we're now calling Choke Point 1.0, which is when the Obama administration went in and said, look, we know that payday credit lenders are legal, gun shows are legal, pawn shops are legal, but we don't like them. So in order to try and drive them out of business, we're going to deny them access to the financial system. And we're starting to hear rumors of the same sort of thing within crypto, that if you're in the crypto business, I'm not talking about Bitcoin, I'm talking about if you're in the blockchain business, if you're in the crypto business, or you're tied to it in some fashion, that it's getting harder and harder to find somebody to just give you the old-fashioned banking that you need to operate. So we are starting to hear rumors of that. We're starting to share that with lawmakers. In fact, I know we've got a big conference today and had a couple high-profile lawmakers over to talk about exactly this. I hope that we're able to shed some light on it. I hope it's not true. I fear that it might be.
Well, I'm wondering about the tenor of those conversations as well. We were just speaking with the CEO of BitGo, who said, look, if you had opened the banking system more widely to these crypto companies, you wouldn't have had that kind of concentration at a few particular banks. So I'm wondering how the risk profile of cutting crypto off entirely versus allowing it to be more open in the banking system is weighed on Capitol Hill among the people that you speak to, just kind of the tone of those conversations?
Yeah, and it goes back to a little bit what Perry Ann was talking about on your introduction, which is the regulators are supposed to help make things more stable, not less. They're supposed to do their prudential oversight so that we don't have these types of difficulties. And you have to wonder if there's not certain policies that the administration is putting into place that have perhaps the intended, perhaps the unintended consequences of raising the risk and of increasing instability. And did we just see that at SVB? Were people at SVB because, you know, they were really good at it? Or was there some factor in there that said we're at SVB because nobody else will take us, or it's hard to get banking someplace else? And I think it's probably someplace in the middle. But the fact that any policy would make things less stable is worth paying attention to.
I'm really curious on your thoughts on this because SVB was so closely tied to the technology industry as well as an early banker to very significant companies in the crypto industry. But there's also this criticism that had some of the rules not been rolled back in 2018, that some of this would not have happened among banks of a certain size. What do you say to that?
Yeah, of all the things that are happening, I think that's probably the least interesting. It's certainly the most political, and it gives Elizabeth Warren a chance to beat up on banks because that's what she does. That's how she made her name for herself. But this is how I explain it to people. Yes, we did roll back some regulations on banks under $250 billion, I think, back in 2018. We went from here to here, okay? The stuff that SVB did should have been caught if the regulation was all the way down here. It was the most basic sort of regulation that you do. Duration risk would be one of the first things you look at if you're the OCC, the FDIC, or the Fed. So yes, there were changes in 2018. Yes, they did impact banks such as SVB, but that's not causation, that's correlation. Mm-hmm. And that even if we had taken the regulations down to the very barest of minimums, somebody still should have been looking at the duration risk at SVB, and apparently they weren't.
Mr. Mulvaney, I'm also curious here. You know, it's very clear that the regulations around crypto are very muddy, but on the other hand, I'm wondering from your perspective, what was the industry's fault? At the end of the day, a lot of people lost money in exchanges and from lending products. And so what was behavior that should never have been there?
Listen, losing money does not mean you're doing something wrong. I mean, this is a developing industry. It's a new industry. There's going to be folks who make a lot of money. There's going to be folks who lose a lot of money. Just because you lose money in any particular industry doesn't mean you've done something wrong. You might have a bad business model. So no, I don't blame the crypto folks for what happened at SVB. In fact, I sort of look at this as the banking equivalent of what happened at FTX. So many people want to look at Sam Bankman-Fried and the FTX situation as something that was caused by crypto. It wasn't. It was caused by fraud. It was connected to crypto because of what Sam did, what FTX did, but it wasn't caused by crypto. It's the same at SVB. This is a banking failure. This is folks who apparently there was only a couple people on the board who were even bankers. It's a banking breakdown and not managing their risk correctly, not hedging their risk correctly. It was a banking failure. Was it tied to crypto because they're positives from crypto? Yes, but crypto didn't cause this difficulty. So no, listen, you can. There's all sorts of criticisms you could levy against operators in the crypto space. I get that, but FTX was not a crypto problem, and SVB is not a crypto problem.
It strikes me that we are here in the middle of a banking crisis, talking about it now, and yet I have one eye on the wire right now, waiting to see if any headline crosses related to your former boss, because former President Trump put that idea out there into the universe that he was potentially going to be indicted and arrested today. So we're all watching for it. He has managed to insert himself into this news cycle. You probably know his way of thinking better than most. What was the intention with the post he put out over the weekend and trying to call attention to this potential indictment?
Attention? There's no question about that. I think what he probably heard, by the way, I don't think there's any chance he gets arrested today. In fact, here we are. I think it's past noon now, and I'm pretty sure he's not going to get arrested. An indictment might come down, but I doubt very seriously you're going to see him in chains before the end of the afternoon. Keep in mind, this is a man who's surrounded by guys who carry guns, men and women who carry guns. So until you start hearing the United States Secret Service talk about moving the president to New York, I don't think we have to worry about an arrest. But my guess is that someone told him at a meeting that there was a chance he might be arrested as early as Tuesday, and he decided to be proactive in a way that acts as what Donald Trump does, which is Donald Trump is catnip for the American media and the world media, and he knew he'd get a lot of attention, and he did. I think, Kayleigh, it's maybe the third most important story in the world this week. I think Xi going to Russia is probably the first most. Then you've got the banking crisis afterwards, and Donald Trump possibly getting arrested is a distant third of that.
All right, and we're going to talk about all of those on Balance of Power later today on Bloomberg Television at 5 p.m. So make sure everyone to tune into that. Thank you so much for joining us, Mick Mulvaney, of course, the former chief of staff to President Trump. Now, coming up, we're going to turn our eye to another part of Washington as well, the Supreme Court, and how crypto is coming to it. This is Bloomberg. This is Bloomberg Crypto. I'm Kaylee Lyons in Washington with Sonali Basak in New York. While here in Washington, the Supreme Court is entering the era of crypto. Justices are hearing arguments today stemming from Coinbase's efforts to push 2 lawsuits into arbitration. It's just the first of potentially many future cases that could define the industry for years to come. Joining us now for more is Bloomberg Supreme Court reporter Greg Stohr here in our D.C. studio. So, Greg, maybe it's less about this case specifically, more what it signals the start of.
Right. This case was really more about arbitration generally, not about crypto specifically. It did arise in the context, as you said, of a Coinbase, or a pair of lawsuits against Coinbase. But there are a lot of other issues that are coming because this is a brand new issue. It's unlike any other industry. It means we're going to have these kind of old laws trying to apply to this novel context of crypto.
Novel context. If you could run us through, Greg, really quickly here, what are the problems that could be brought up in the future that this could start to set precedent for?
Yeah, so the biggest issues are really about the SEC trying to classify crypto assets as securities, which means it would come under the SEC's purview. There's a very big case before a federal district judge in New York right now. There's another case that involves SEC regulation of a Bitcoin exchange-traded fund in federal appeals court here in Washington. Both of those cases could make it up to the Supreme Court, and those would really shape how the industry is regulated, what it looks like going forward.
Do we have any insight from history, just quickly, as to how the court treats regulators and what it does to their power usually?
This court is pretty darn skeptical. And so if we're talking about the SEC trying to step in and regulate, what we see in the past few years from this very conservative court is they tend to be skeptical unless there's clear authorization from Congress.
All right, well, we're going to look out for your reporting on this case and the cases to come. Greg Stohr, Bloomberg Supreme Court reporter, thank you so much for joining us. Well, that wraps it up for us this week, but we'll have plenty more ahead next Tuesday at 1 p.m. Eastern Time on Bloomberg Crypto. Sheila Warren, the Crypto Council for Innovation CEO, will be joining us, as well as Samar Tarbar, Bit Digital's Chief Strategy Officer. We will continue to watch the fallout from the collapse of several crypto-friendly banks. What is next for the industry and what the regulatory environment is looking like down here in Washington, D.C. Thank you so much for joining us, Sonali. Matt and I will be back next week. Thanks for watching. This is Bloomberg.